In today's video, we are going to be looking at market structure, understanding of market structure. How does the forex market move? If you truly understand market structure, you'll be able to read a price chart extremely well. You will know what actually moves the market. So in today's video, we're going to be looking at the 4 stages of the market. In other words, we call it the market structure. And these 4 stages is what always occur in the market. So once you understand these 4 stages, you will know when to enter a trade and when not to. You will know when to stay out from trading. So market structure is extremely important in forex trading. So that is why you need to take our time to understand how the forex market moves. So not to waste much of your time, we are going to head straight to the main topic. Like I said, there are 4 stages that make up a market structure. We have the accumulation stage, we have the advancing stage, we have the distribution stage, and we also have the decline stage. These are the 4 stages of the market. When we talk of the accumulation stage is a ranging market after a downtrend. That is, after a downtrend, there will be what? A range. A market is ranging in a bus after a downtrend. We call it what? Accumulation stage. You know that after a downtrend, there will definitely be a range. So when there is a range after there is a strong downtrend, we call it what? An accumulation stage. Now, after the market must have ranged for some time, what happened is that it will break out from the range. And if the market eventually breaks out above the resistance level of the range and start heading up, it means we have entered into another stage known as the advancing stage. The advancing stage is when the market is in an uptrend, making higher high and higher low. So we call it an advancing stage. So during the advancing stage, we only look to buy. But during the accumulation stage, we buy and sell. We buy at the support level and we sell at the resistance level. But during the advancing stage, we only buy. We buy from the pullback, that is the support level. Because the market is in an uptrend, no one knows when the trend will end. So for us to be safe, we trade in the direction of the trend, and that is why during the advancing stage, which is an uptrend, we only look to buy. And when the market travels, it will get to a point of resistance. And when the market gets to a point of resistance, it will do what? It will start to range. And when the market starts ranging after an uptrend, we call it the distribution stage. So the distribution stage is when an uptrend is over and the market begin to range at the up. We call it what? Distribution stage. So in this period, there is equilibrium between the buyers and the sellers. The sellers are selling from the resistance level while the buyers are buying from the support level. So the market will be in that stage for some time, and as the buyers and sellers are exchanging prices, definitely one of them will defeat each other. Either the buyers defeat the seller or the seller defeat the buyers. And if the sellers eventually defeat the buyers, the market will now break below the support level and start trading down. And in that stage, we call it what? The decline stage. So a decline stage is a downtrend with series of lower high and lower low, lower high and lower low. We call it what? the decline stage. So a decline stage is when there is a downtrend. After a breakout from a support level, we enter into what? A decline stage. And after the price must have gone deep, it will also meet with what? A support level. And when the price eventually meets with a support level, it will begin to range and will come back to our first stage, which is the accumulation stage. That is range after a downtrend. So you see how the forex market moves. You see the rotational movement of the forex market, right? So the market moves in cycle. It goes up, range, comes down, range, goes up, range, comes down, range. So that is why we said in the forex market we only have 4 stages, which is the accumulation stage, the advancing stage, the distribution stage, and the decline stage. Once you understand these 4 stages of the market, you'll be able to know the directional movement of the market. You know whether if the market is trending up, so that you can only look to buy. You know whether if the market is trending down, so that you can only look to sell. You know whether if the market is in a range, so that you can only look to buy and sell, because at that point the market is stuck in a bourse. So there's an equilibrium between the buyers and the sellers. The sellers sell from resistance level and the buyers buy from support level until there is a breakout.